Good morning, everyone. Welcome to our Thursday morning trading room. 1 second here. We'll get this screen share going on. Yeah, there we go. Okay. So yesterday, a bit of a funny kind of day. The market did it did tear off into a rally shortly after we closed the trading room. The rally, while we were anticipating a pullback, I have to admit the rally was a lot stronger than I think most people saw coming. But after that, the market settling into its traditional sideways range, which is very often what we see in the afternoon. And then here in the overnight, you can see the NASDAQ off on another tear. I guess everybody in Europe is out buying their new Apple Watch, which most of the talking heads seem to indicate that that was a big spark for the NASDAQ yesterday, the Apple product announcement. Well, here we go. So we've got ourselves a rather substantial gap below the market, given this high open. And we'll see here whether the NASDAQ actually tries to fill that opening gap, or if it's going to be more of an expansion gap, in which case we can expect the market to continue to rally. For those of you who like your first in-sync signals, wow, looks like we got one right there on the Eagle. We're about halfway to our profit target. I think that one printed. Yes, that one printed about a minute after the opening bell. I was actually going to look for that signal here this morning because it's been working out so well this whole week. That first in-sync signal with some pretty good follow through. Oh, might have spoken too soon. As there's a little bit of a struggle. You can see a little bit of buying going through here, the NASDAQ. So certainly a fair amount of volume off around this 75.50 zone. A daily chart gives us an interesting little look. Here now, the daily. And you know what? It's interesting always to take a look at a daily chart or even an hourly chart just for a little bit of a reference where we're at. Here was yesterday's session. It looks fairly neutral when you step back, even though it did seem a lot more bullish than that. What I find interesting is this rather large volume associated with this relatively tiny bar. As I mentioned before, traditionally, you expect big bars to have big volume, small bars to have small volume. And when that scenario changes, then you can usually be on the alert that something is going to happen. You don't always know what, but you know something's going to happen. Here, for instance, you can see we had some very tiny bars and yet relatively high volume, especially given that the big bars preceding that were sort of small by comparison. So You can see here we're opening now with a gap to the upside. And what I was going to point out is that if you draw some short-term trend lines, you can see we've broken a trend line that way, and we're sitting on a trend line this way. So a very interesting spot for the market right now. Buyers and sellers are going to be forced to shore up their decisions here with some money. They're going to have to put some money where their proverbial trading mouth is. So far, however, things looking pretty strong for the buyers. So your first in-sync Eagle and Raptor signals both working out very nicely. Trade forecaster saying we are entering scalp mode, which we'll see how that affects the market. Typically, scalp mode means that we're going to see more frequent pullbacks. Maybe a little bit deeper on the pullbacks. I'm going to see if I can avoid that quarter to the hour trade that last couple of days I've just been a sucker for. Don's asking, when are you going to switch to the December contract? Probably tomorrow, Monday, most likely at the latest. I know Ninja alerts you. They always alert you a week early, which I suppose is a good thing. Goodness knows you don't want to be the last one trading the expiring contract. But we're day trading anyway, so it's not like if you're holding overnight, that could cause you some problems and a lot of extra fees as you have to hire your broker to get you out of your mess. Actually, I'm not even sure how they settle a non-physical like the index. I guess you just got to pony up the cash. Yeah, Mickey's asking the same thing. Mickey says, did I miss the question? Are we still on the September contract? I'm still trading September. I'll probably change either tomorrow or Monday. The markets are going to be doing the same thing. It doesn't matter whether you're looking at September or December. Ninja gives you the warning a week early, which is fine, but there's still plenty of volume in September. Here I won't build the market analyzer. Well, here maybe I will build the market analyzer for those of you who haven't seen it before. And this will help me avoid doing something silly as we're approaching the quarter to the hour mark. Okay, so first thing you want to do is you want to make sure that you have your December and September contracts. Okay, how do I do that again? I know it is possible. Okay, so I've got September NASDAQ and December NASDAQ. Now you are going to, under File, go to New. You're going to build a market analyzer. And what that's going to do is it's going to give you this kind of funky looking thing. Right click on it, and we're going to edit our columns. The instrument, of course, we want to know. We don't care about the bid, ask, or the last price. What we want is the volume. It's been a little while since I've done this. Here we go, daily volume. I think that's the one. Just in case, I'll also do the average daily volume. Okay. So we're going to apply that. And now we can analyze the difference between the two. So right click, and we're going to add an instrument from our assortment, pardon me. And we're going to compare the September NASDAQ to the December NASDAQ. And you can see that the December volume still far and away the most liquid market. This will change. Well, I think it expires next Thursday. So early next week, these numbers will start to even out. And tomorrow we'll probably see quite a few traders roll over. But there's no panic. Mark trying to walk me through the market analyzer. Okay, well, look at that. That market on a tear right out of the open here. Okay, I guess I got to get really serious about trying that first in sync signal. I'm not a a fan of early trades, but maybe I should be. This is definitely a little bit of a breakout phase for the NASDAQ. Yeah, that's true too. Richard says it's witchy time. I guess that'll be tomorrow on Friday. Is it triple witching or quad witching this month? For those of you who have never heard the term, triple witching, and occasionally there's quadruple witching, is when you get a bunch of things expiring at the same time. Futures contract, options contract. Great question here from Steve. Stephen asks, good morning, Eric. Well, good morning, Stephen. He asked, today in pre-market hours, the market showed up, and sure enough, after it opened, it went up. What is the percentage of the time the pre-market and open match up? All right, so I think what Steve is asking here is you're looking at the pre-market, the London session here for the NASDAQ. There's an obvious uptrend. How many times does the market continue the uptrend out of the open, and how many times will it reverse the uptrend on the open? Great question. And I don't have hard and fast numbers for you, Steve. Typically, though, my gut call is that most of the time, if there is a defined overnight trend, the market will try to reverse the trend early. But as you can see, that's not always the case. That's the problem with gaps. Right, so we opened this morning, we knew there was a large, here, let's do it like this. So the market left off down here and opened up here. So we know there's a gap through here. Gaps are funny things because the one school of thought says that the market will try to fill that gap, and it will, but not necessarily right away. This gap will be filled. You can make a note of it. It may take a day, may take a week, but the market will fill this gap. You probably heard nature abhors a vacuum. Well, there's the logic behind filling gaps. Most of the time, the gap will try to fill early. So you'll see the market come down, and normally traders will consider anything halfways or better to be a fill. Personally, I like to see the whole thing fill, but sometimes this is all you're going to get, and then the market will continue up. Regardless of whether you think the market's going to fill that gap right away or whether it's going to continue on that gap, maybe the most important thing about a gap is to look at it this way, that it's actually a huge rally bar. Right? If you compress all that overnight trading into one bar, it would look like this. That is a very aggressive bar. So I think you have a pretty good idea on a gap like that, which way the market tendency will be overall. So I think overall we can say the market will be more bullish today. But yeah, it's a tough call, Steve. You know, in a perfect world, what you can say is, okay, I know the market is bullish. I'm going to look for a buy signal. And I know it's bullish because of this gap. Right? Because this gap is essentially one great big bar. So I'm going to look for a buy signal. So let's say, let's say you're trading your Raptor or Eagle or whatever, and you produce a buy signal. So you buy. The problem with this trade is not so much the direction, but covering the position. You know, and the market's going to eventually recover at least half or 2/3 of that gap. So, you know, your initial stop needs to go somewhere down there. It's tough. It's really tough. I hate big opening gaps because it gives you this exact problem. I have a pretty good idea which way the market is going to be inclined to go. But then you look at it and you say, wow, you know, why didn't I just take the risk early? Which again, going back to your first in sync Eagle signal, this is this morning's. Bear with me here a little bit. I'll go back a couple of days and then we'll just see how we're doing. And this is an exercise I encourage you to do on your own. Don't take my word for these things. You need to check it on yourself. Okay, so here is the one from the day before. Now we're looking for the first signal in sync with the band. So the band is bearish. We're looking for that first sell signal. So that was Wednesday. This now is Tuesday. And it looks like it was right here. Just double check that. Yep. So this was Tuesdays, and I'll just do Mondays. I won't go back another week. But so far you can see all those signals working out quite nicely. And this signal not in sync, your first in sync signal actually right here. And that too, at least going low enough to find your high probability signal. Let me go back to Tuesday's session here. Because this was another instance where relative to where the market left off and relative to where we opened, there was a big upside gap. So you can see early on the market tried to extend the overnight trend. And fortunately, it did get low enough to find what would have been our profit target. But then it just made the big reversal and got right into that gap. So I tend to favor an early fill of the gap, but of course, that's not always the case. Sorry, Steve, I know that's not as helpful as you would have liked. Yeah, Mark says the Nasdaq's been pretty squirrely the past several months. Just when you think it's going to trend in a direction, it turns on a dime. And speaking of turning on a dime, we're back now into the hard edge. We have seen, you know, a nice move higher, a nice number 2 signal at the end of that. And of course, the hard edge would be the target. Into the hard edge here on the Eagle. So we're going to look for some sort of reaction. The trend is up, though, and I think so long as there's a trend, you'll almost always do better trading with trend. In fact, I've mentioned this before, and it may be worth demonstrating again. We get these discretionary signals with our trading tools. With the Raptor, the Eagle, the Falcon, the Hawk, we get these signals that don't really qualify as a high probability signal, and yet they still meet all the programming parameters, and that's why they're printing. We have a trend. We could just look at taking the next buy signal. You know, it could be as simple as that. It's right now, it may visually qualify as a number 3 signal if we get the bounce here off the hard edge. If it drifts much lower, it's really going to put the pressure on the buyers to follow through. Let's see, do we have a buy signal anywhere else? We had some warning dots here. Another warning dot. Oh, we did have a buy signal here in the Eagle. I'm going to look to do it either in the Falcon or the Raptor because it'll be a little bit more affordable. Oh yeah, Mark makes a good comment here. You can save your market analyzer as a template. He saves his as a rollover volume template so that it's easy reference. Oh, look at that. We did have a big chunk of selling go through the number 2 signal, finding the hard edge as anticipated. All right, well, I'm not going to get that buy signal. I was just going to show you. Oh, I might get it here in the Falcon. So all I'm looking for is a buy signal. I've got the warning dots. I'm just looking for an excuse to buy with the trend. Remember, you should always have 2 reasons for taking a trade. And this, I'm just doing this as a demonstration. Hopefully it won't make me look like an idiot, but just how important it is to stay with trend, even though, you know, this market is, according to the Falcon, they become a lot more bearish at this point. Trend very often trumps all. Okay, so here again, we get the warning dots. I'm just going to get ready here on my buy button. No, it's still bearish. This is one of the luxuries of being a trading room moderator, is that I can actually show you things like this. Yeah, Mark says this is the dime that I meant. Yeah, turning on a dime. It's you did get a little bit of a top, but not much. All right, here we go. Nope. Every time we get that green warning dot, it is followed up with another red warning dot. Oh, here we go. Okay, back to back warning dots. Let's see if we get the buy signal. Not yet. And once again, there it is. All right, so I'm just going to buy in. And once again, the challenge here is not so much the direction. And here, just for giggles, let's see if how far this trend does try to recover. Okay, so we hit the break even. I tried to get the break even out of the way. You can see we would have hit the high probability profit objective. Okay, we'll go with the ATR. And again, this is nothing fancy. It's just recognizing the market has a trend today, and I'm trying to take advantage of that fact. I'm trying to take advantage that the market may be more inclined to go higher than to go lower. And so we're kind of going to try to trade back here to this secondary resistance line. And of course, if it can get above there, well, next stop logically would be 7,600. But we're kind of struggling here a bit. No. Okay, well, there we go. That's, not a bad little trade just by trying to stay with the trend. Trying to decipher trend is without a doubt going to be your biggest challenge as a trader. After that, it's going to be trusting your instincts to stay with the trend. Well, actually, it's not instinctive to stay with the trend. It's going to be fighting your instincts and staying with the trend. It's just something in human nature. It makes it easier for us to see the counter trend move than the with trend move. And I'll be the first to admit counter trend moves are so inviting. And they're exciting too because they tend to develop quickly and have strong follow through. Unfortunately, they don't work out very often. There's your catch-22 with a counter trend trade. All right, well, talking about counter trend trades, we're getting a little bit of a top here in the NASDAQ now. By that I mean we're seeing a lower swing high relative to this one. The safe money is going to wait for a break of this support zone. There's going to be a little bit of a retest, or it might be a large retest, but then there'll be a retest, and then they're going to look to get on board. When there's evidence that there's going to be continued selling, that will make for a higher probability trade. The size of this move, well, it very often tends to be worthwhile, but sometimes it can be a little bit smaller. But the probabilities will be in your favor, that at least you'll get the direction right. And right now, we're pretty happy just to be moving sideways. Yeah, Mark says, this is why futures are so fun to trade. You should have put quotes around fun. Trading has its moments, that's for sure. It can also be one of the most frustrating things you can ever try to do. All right, there. It seems like they may be consolidating here a little bit before attempting another move. You know, here too, it's not so much the direction. I think you can remain bullish on this market. The problem is going to be covering the position, because there's a good chance the market will try to test the bottom end of this trading range. Here it's a little easier to see on the Eagle. So here's the bottom end of the trading range, just sitting above 75.50. It would not surprise me to see the market test this bottom end of the range and then rally back up. Oh, and here now on the Raptor, we're producing our number one signal, which would be with trend. And, you know, if the market is in sideways congestion like this, oh my goodness, look at the Geiger counter just stuck there on the sell side. When it's in this sideways trading congestion, it's not a bad idea to maybe employ a second push entry opportunity. And all that means is we allow the signal to engage, we see where the market reacts, and then we use that as our signal bar. So if this bar finishes lower, it will become my signal bar. So there now is where I would place my entry. And what that does is it usually allows you to get by with a slightly tighter stop. Sideways trading ranges are tough though, because, well, by definition, they're sideways. The safer plan would be to wait for an extended pullback and then to try to buy again. You'll always get your best buying opportunities on a pullback. It's not usually advisable to try to buy at the highs. Although I know of several stock strategies that recommend that. Stocks are a little bit different than futures. All right, we'll put that on the shelf. I would be more inclined to, like I said, either wait for an extended pullback or to wait for a breakout and a retest. All right, here we go again. It isn't much of a pullback, but we're continuing to make these higher swing lows. Let's see if I get a second push. Well, what I'll do is I'll throw my order up here. This will be my just in case order. I actually don't like placing it quite that far from the signal because, well, that would be my profit target. And here I haven't even been filled yet. But this is what I want to avoid. Hence the second push entry. Okay. And now we're back down here around the 75.50 zone. And we'll see what they do with that. All right, a little bit of a pushback from this bottom end of the trading range. So here we've seen the breakout. And now the retest. Now comes the tough part. If we come back here with the sell signal, do we have the nerve to sell it? Oh, and there it is. There's the sell signal. Come on. And you're going to notice with the eagle as well, very often you're going to get a second push opportunity. I'm just going to take a single on this. Oop. Oh dear, I made a bit of a mess here of my my setup, but hopefully it'll work out. The challenge now, getting below these lows. Okay, the big push. Okay, because of the larger tick value on the Eagle, I'm going to be a little bit more aggressive with my stops. I'm going to take the trade to break even at this point. Because we've broken this low, and I'd be looking for a little bit of follow through off that. Hopefully I'm not too early on my roll. Come on, get down there, you stinkers. We'll see here in a minute whether that was a good call or whether I was a little bit too anxious. Oh, look at that. They're coming back off of those lows. Funny thing is, we actually hit the resistance line pretty right on the number, and now we're bouncing back. A buy signal at this point, which would technically be a number 2 signal, would probably be, well, it would be with the bigger trend, the larger morning trend. Okay, I'm going to look for it. There it is right there. And I get a second push, and all right, no guts, no glory. Okay, now we'll see whether we get a trend resumption. This high right here, or certainly the one closer to 75.60, is a big deal. the market really needs to get above there if this trade has any hope of following through. And so far, it's not looking all that promising. Should have waited to take out the 75. Certainly this swing high here, what is that, 75, 58, 58 quarter. That would have been a safer entry. Well, here again, the challenge with essentially a counter trend type move, or at least relative to this morning. With those types of moves, you're always better off if you let the market take out a significant swing, a significant level of support or resistance. I think we haven't drifted too far off this whole 75.50 zone. Are we back near the lows of the morning? Oh, actually, we're not that far off the lows of the morning. Okay, here comes that a bullish push. Again, you can see the Geiger counter here getting green. The Hawk, a little bit of a jumbled mess, showing some neutrality. The Falcon, surprisingly turning bullish and giving us a late filter entry signal to buy. Okay, here now, yet another number 2 signal. And this goes back to what I said earlier. You're either going to consider this to be with the bigger trend, or in which case it's a with trend signal and not a counter trend signal. Or if you think the trend has shifted, then you'll probably want to avoid it altogether in favor of a sell signal. But I still think the buyers have some unfinished business here. And once again, it's probably safer for me to enter here above this, at least above that last swing high, although I did breach this swing high here. All right, and I'm going to try to run this one out a little bit just to see if we can't. Oh, that would be a big move to recover back to the highs of the morning. Let's see. Let's see what they got. So this is that stumbling block where the market held before. Oh, they're still struggling with that whole zone. This now, the big obstacle, that swing right there. This could actually be a pretty good trade, folks. If you're looking for a trade to mirror or to hop in on, that discretionary signal right there, also a very late second push entry on this number 2 signal, and an early number 1 signal, could work out to be a nice little trade if the market can get above that little swing point. We seem to have lost some of the earlier momentum. And now we're stuck with this back and forth. No, the seller's just not giving it up here. And hopefully they don't get below this swing low here. Of course, is where I have my stops. Maybe I'll give them just a couple more ticks. I hate getting tagged by a tick or two only to watch the market reverse and head the other way on me. But you can see we've got a lot of sideways trading here, a lot of candy striping in the background. So it's to be expected that the market's just going to continue to chop. Yeah, what started as a very nice trend is quickly disintegrated. Swing mode coming up here in a few minutes time, so it looks as though we could be transitioning out of a trend into a more choppy type environment. It's not looking very promising. No. And you see from that follow through there, I wasn't the only one stuck on the wrong side of that trade. A lot of traders just got tagged out on that quick little move lower. All right, well, the market really, I don't know, change in trend at this point. This is why it's so much easier as well to do, to limit your number of trades on the day. You know, if you're only looking for one or two winning trades and you have a reasonable trade quota, much easier to do that than to try to follow through on a bunch of trades and hope that each one works out. And so on it goes. We're continuing to get this back and forth type action. And yeah, you can see here trade forecasters saying we are in swing mode, moving into scalp mode, which is what you would anticipate that the market would continue to chop about like that. And now a little bit of a bounce off of the low of the morning. So that early rally fully recovered now. And it looks like I might have been correct about the direction, but too early. My timing was bad. We'll see. Now that we've recovered back to the lows of the morning, it is really a fairly neutral market. I thought we might get an early number one signal here, or even a full cloud crossover. The Geiger counter just sticking here to the sell side, indicating that there's still quite a bit of bearishness in the market. The Falcon and the Hawk already a little bit more bullish. The Raptor kind of conflicted. The Eagle still full on bear mode. All right. Let's see if we get a number one signal here. I keep trying to hop on board these number two signals, looking for an early entry, and I got burned on those a couple of times. This time I'll wait for the number one signal. Okay, we might get a 2-3-2 type setup, which would reinforce the notion that maybe the buyers are going to try another rally. There's the early number one signal. Cloud's not fully crossed, but almost fully crossed. A little bit of a pullback, the signal. Of course, you can treat it as a discretionary signal. There's nothing wrong with that. Let's see if we can't get just that one more signal to follow through. I'd like to finish the session here on a positive note. Well, again, the early number one signal. We're getting a little bit of a reaction off of these highs. That might be the best I'm going to get. Let's see if we get a little bit of a pullback here. All right, well, the session is almost drawing to a close, so I'll take a look. I'll consider this an early number one signal. The cloud's almost fully crossed. We had the pullback. We got the buy signal. All right, you can see the clouds narrowing here a little bit as the faster cloud tries to overtake the slower, but just a very, very neutral market here overall. Just wanted to make sure my entry was above that swing high there. Okay, we seem to have a little bit of giddy up on this one. Oh, I gotta stop saying stuff like that. As soon as I say that sort of thing, the market just falls flat. Okay, I'm not gonna say anything. I will put I'm gonna try to run it out. As you can see, I'm gonna put my break-even trigger near this swing high, which will be significant if the market can trade up there. Well, the struggle continues as we going to close up the room here for the morning. If you're going to continue trading today, I firmly believe the market owes me at least one move higher here. But after that, it's anybody's guess. We've still got that big gap below the market, which the market may well try to fill. Tomorrow, if you think today is choppy, just wait until tomorrow. All right, everyone. See you tomorrow. Bye for now.